Mr. Y keeps his books by single entry. He started business on 1st April 2013 with a capital of 3 lakh. On 31st March 2014, his position is as under. We have some information about cash position, creditors, then cash at bank, bills payable, furniture, outstanding expenses, plans, sundry data, stock, bills receivable. Okay. Now, from this information, we have to find out what is the profit made by Mr. Y. Okay, we know what is the capital he brought in, we know what are his assets and liabilities, and with this, we have to find out what is the profit. So, how do we go ahead? In single entry system, finding profit is simple. If you know what is your opening capital, if you know what is your additional capital, and if you know what is your drawings, and if you know what is going to be your closing capital, okay, then we'll be able to find out what is profit, right? So now we know the opening capital, which is 3 lakh. Do we know what is the additional capital? No information about additional capital, so let us assume there is no additional capital. Do we know drawings? There is no information about drawings, so let us assume there is no drawings. Do we know closing capital? Closing capital is not available directly, but we can find closing capital because we have information about their assets and liability. We have information about assets and liability, and from this we can prepare a statement called statement of affairs, which is very similar to the balance sheet which we prepare. And that statement, what we'll do, we'll list out all the assets, we'll list out all the liabilities. So this will throw a difference. Okay, this will throw a difference, and that difference is nothing but our closing capital. Okay, so once we have the opening capital and closing capital, then finding profit is simple. So let's get started. We'll have a working note for finding what is the capital as on 31st March 2014. Okay, so we need a statement of affairs of Mr. Y as on 31st March 2014. So we have lot of information here. Let me just clear and we'll pick up only the relevant ones. We understand cash in hand is an asset. So we'll go to the statement. We'll split them like liabilities and assets like what we do in the balance sheet. We understand that cash in hand is an asset, so that should come under asset side 8,000. Next, we have sundry creditors. Sundry creditors 50,000. This is a liability. So we'll go to the statement. On the liability side, we'll say sundry creditors 50,000. Then we have cash at bank 20,000, and this is an asset. So that should go to asset side, cash at bank 20,000. Then we have bills payable 10,000. This is a liability. So we'll take it to liability, bills payable 10,000. Then we have furniture 40,000. It is an asset. So we'll take it here, furniture asset 40,000. Then we have outstanding expenses 8,000, and this is a liability. So we'll take it to liability, outstanding expenses 8,000. Then we have plant, sundry debtors, stock, bills receivable, all are assets. So let's take all these items to the asset side. Plant, sundry debtors, stock, bills receivable, and the respective values. Okay. So now we have all the assets. Let us total this. We'll total all this item, and if you total, we'll be getting this value, that is 5,83,000. Now this 5,83,000, this total should, this is the total of asset, right? This is the total of asset. Now this total of asset should be equal to total of liability, but we don't know all liabilities now because we don't know what is the capital. So simply we'll say the total of liability is 5,83,000. We know what is the total of asset. From the total of asset, we are saying total of liability is 5,83,000. But we know that in liability, we have written only 3 items. What are they? Sundry creditors, bills payable, and outstanding expenses. So let's total them. It is 50 plus 10 plus 8, 68,000. 68,000 is the total liabilities what we know, whereas the total liabilities is supposed to be 5,83,000. So obviously there is a difference between these two, and that difference is nothing but this 5,15,000, and this 5,15,000 is nothing but our closing capital. So in this way we have closing capital with us now. Already we know what is our opening capital, which was 3 lakh. Now we know what is our closing capital, which is 5,15,000. And we said we can find the profit if we know the opening capital added by additional capital added by profit subtracted by drawings. We can find out the closing capital, but here our focus is not finding closing capital, it is finding profit, and we don't have additional capital, we don't have drawings. It means from closing capital, if we can subtract the opening capital, then automatically we are going to get the profit. Okay, so let's put that in a statement format. We'll write closing capital, we'll give the heading computation of profit of Mr. Y. Closing capital we have calculated, now it is 5,15,000, right? Now with this we have to add drawings, but we understood there is no drawing, so the total is same 5,15,000. We have to subtract additional capital, we don't have any additional capital, so we get 5,15,000 minus 0, the adjusted closing capital is same 5,15,000. Now from this we have to subtract the opening capital to know what is the profit, and we know the opening capital is 3 lakh. So let's subtract that 3 lakh. So now we get profit made during the year is 5 lakh minus 3 lakh, and it is 2,15,000.